Hi, welcome to another video. So you've probably been checking Bitcoin's price every day, waiting for that massive post-halving boom we're used to seeing, only to be massively disappointed. It's August 2025, and if you're feeling like this rally is stuck in the mud, you're not crazy. This might actually be the slowest post-halving climb Bitcoin's ever had. And that 500-day rule everyone swore by? Looks like that ship hasn't just sailed, it kind of sank. Just look at the numbers. Previous cycles, we're talking crazy gains. 8,000% after 2012, 285% after 2016, 710% after 2020. This time, barely hitting 80%. That's not just slow, it feels broken. And if you're waiting for September 2nd because that's supposed to be the peak, well, good luck with that strategy now. So why is this happening? Honestly, it's a perfect storm crushing the usual Bitcoin hype train. First off, those big fancy ETFs everyone got hyped about, they brought in serious cash, sure, but they also brought in stodgy, slow, dollar cost averaging institutions. They don't FOMO like we do. They drip feed money. Great for stability? Absolutely. Awesome for wild parabolic moonshots? Not so much. Then there's the terrible macro scene. High interest rates making everyone scared to risk money, unlike the easy money days. Third, retail frenzy? Totally dead. And finally, good old Uncle Sam. Regulations are still a jumbled mess, keeping big conservative cash sitting on the sidelines. So how do we even navigate this mess? We stop relying on one thing, like the halving, and start looking at the big picture. This is where macro analysis comes in. Macro analysis looks at the huge economic and market drivers that actually push Bitcoin's price now. Basically, it's understanding how the overall health of the S&P 500, what everyday people feel about their finances, whether anyone's even Googling Bitcoin, and the halving scarcity together shape the market. Trying to predict price on one factor is like driving with one headlight covered. You're going to crash. That's why I've been personally leaning hard on this amazing new tool, the Bitfolio Academy Macro Indicator. It actually takes those four massive pillars, S&P 500, big money mood, consumer confidence, are regular folks feeling spendy, Bitcoin Google trends, where's the hype, and the Bitcoin supply cycle, having scarcity, together, and squishes them into one clean score. So instead of tracking 20 different charts, you get one powerful number saying how strong the winds are blowing. What's it showing right now? Truth bomb, the score is down from its peak. Why? Because even though the S&P 500 is rocking and supply is super tight after the halving, consumer confidence is shaky and Google Trends data for Bitcoin totally in the toilet, like 23 out of 100 bad. Retail doesn't care. So two pillars support the price, two are dragging it down. Boom! That explains the sideways slump perfectly. Look, the lazy cycles are over. Bitcoin's all grown up and playing with the big boys now. But this isn't bad news if you adapt. Tools like this macro indicator show you why the market's doing what it's doing, so you can make smarter choices, not just guesses. Check out the Bitfolio Academy Macro Indicator on my Patreon page. You can download the spreadsheet with all of the calculations for free. It's pretty cool. Anyway, what do you think about this new post-halving reality? Are you selling before September 2nd? Holding? Buying the dip? Hit the comments below. I want to hear your strategy.